Hi guys, Mike here. Hope all of you doing well. Boy, it has been a busy couple weeks. I apologize. I've been meaning to shoot a video for a couple weeks now. I've been so busy just transitioning my university classes to online. I know a lot of you are busy too, but I have been thinking about you guys and I wanted to shoot a video and I found some time now. So I wanted to give you guys an update on the marketplace and my thoughts of what's happening. Before I get started again, my name is Mike Hernick. I have a Facebook page called The Financial Mechanic. I also have a YouTube channel called The Financial Mechanic. I would love your support, any feedback, any comments, greatly appreciated. If you can subscribe on YouTube, follow, share my content on Facebook, that would be greatly appreciated. Of course, so let's get into it with COVID 19. Really, everywhere you turn on the radio, the television, media stations, it's all about COVID, COVID, COVID. And it's a little bit overwhelming sometimes because anytime you want to just get some news update, it's all sort of the same narrative. And it's interesting because I do a lot of sort of research and financial research on my own, and it's just almost like every headline is about coronavirus, and we recognize it's a big issue, as you can see with the businesses being closed and stuff like that. But you know, it is almost like every radio station is sort of saying the same narrative for headline purposes. So just keep that in mind when you guys listen to the news. Is just sort of be pick and choosing what's actually news, what's information, and what's really not just headline sort of boosters, I guess. Market updates. So what's going on with the stock market? The Dow Jones, the index I like to follow, is about 21,000 points, just under today. So since the last video, the markets have gone up. It's interesting because the markets have fluctuated significantly. One day they're up 5%, one day they're down 5%. So it's kind of interesting to see why that's happening. There's a gentleman named Jim Rickards that if you guys are interested in, I follow him and his content a lot. He talks a lot about monetary policy and stuff like that. And one thing he said is that the stock market is trying to find a balance. And I think it's so true because, if you told, first of all, the stock market's unlike 90 years ago where we basically all the stock trades and stuff like that were not electronic and done by mostly by computers and algorithms. Now things were much slower to react, and now it's sort of like, hey, here's the news and here's the reaction. But what the stock market is looking for is sort of this bottom, or this kind of, hey, like, do we have any certainty with the coronavirus or not? And there really isn't, because you have people like President Trump that were saying that they're hoping for all the businesses and sort of things to be back to normal by Easter. And then you have, our government that's saying it's at least till July. So it's interesting. I think what you're seeing is, a lot of times people ask, is this the bottom, Mike? What do you think? And I really don't think it is. Couple of reasons why. First of all, stock market hasn't really priced in what may happen or what could happen. If you told the stock market that things will be back to normal in 3 months' time, the market will price that right away. It'll sort of the price will either sell by however investors sort of look at that, and then the stock market will kind of act accordingly. But no one knows that. No one knows. Is this going to be a month? Is this going to be a 6 month thing? No one knows. And people can speculate all they want, but at the end of the day, this is an issue. And the governments have reacted accordingly. You can see that a lot of businesses are closed and a lot of services, non-essential services are closed. But I always say this to people is, the government sort of turned the light switch off on. I'm more from the business side, not the actual virus side, but from the business side, the light switch turned off, saying, hey, we got to stop. We got to let this, let people self quarantine and stuff like that. But I find it interesting because when does the light switch go back on, right? The thing is that it's easy to tell business owners and non-essential services and people to sort of say, hey, this is a problem. Let's wait till we have more information. But at what point do we turn the light switch on? When do we say, okay, everything is back to normal? And I think that uncertainty is the reason why you're still going to see, I think, some significant volatility in the stock market, because that hasn't been priced in yet. Because no one knows. And if we did know, if everyone said in 2 months' time it's 100% back to normal, the marketplace would sort of price that out accordingly, especially the stock market. Now, talking about interest rates. So interest rates, Bank of Canada, US interest rates are basically 0% overnight lending rates. Insane. And within 2-3 weeks, the Bank of Canada and the US Fed have dropped rates to basically nothing. But how does that impact you and I? So what's interesting is that typically what happens is as the Bank of Canada and the Fed lower interest rates or their overnight lending rates, then banks will lower their mortgage rates and their rates on credit cards, line of credits, and stuff like that. But what's happening, and I think this is fascinating, is banks are actually not really lowering rates, even though the government has lowered their rates. In fact, some banks are even increasing rates. So I'm like, well, why is that? Because banks are quick to react to say, hey, if rates go up, then we're going to charge higher mortgage rates, credit card rates, and stuff like that. But when rates go down, they're kind of, you would think that it should go both ways. If rates go up, everyone should go up. And if they go down, everyone should go down. And that's not what's happening. And I think that's interesting. So a lot of people saying, well, I got variable, mortgage, I got a fixed mortgage, I got, some debt. How does this work? So I think a reason why banks are not lowering their rates as fast as the government's Bank of Canada and the Fed's rates are is because I think the banks see the current economic state as volatile and they're pricing out risk of lending money based on their interest rates. So really, I think that's really interesting. I guess you see that lenders see some potential volatility in the in the marketplace, and as such they're going to keep their rates where they are or even increase them even though the government is lowering their rates. So anyway, I thought that's interesting. I want you guys to know that. Another thing I want to comment on is fuel prices. I think this is really interesting. First of all, gas prices are like 60, 70 cents now. It's just insane. I don't know how long it's been since we've seen prices like that, but what's interesting, I think, is that diesel hasn't really fallen that as quickly as gas. In fact, diesel, I think, is still over $1 a liter, where gas is like some places, Costco is like 60 some cents. I don't even know what the update, they keep falling. Like the price for oil per barrel is so low. First of all, let's talk about that. So when oil prices, price per barrel goes down, you would think that that gas prices should fall correlated or accordingly. And that doesn't necessarily happen because there's a lot of what we call excise tax that's charged on fuel, on tobacco, on alcohol, stuff like that. So the tax actually still stays even though the price of the actual gasoline goes down. So that's one of the reasons why you see fuel prices not sort of spike down just like you would expect with oil prices going down. So they have fallen, but you would expect that gas should be like 10, 20, 30 cents per liter, not 60, because the price per barrel is super low. Like it's like all-time lows right now. So first of all, that's why gas prices haven't fallen as much as maybe we would think. The second reason why diesel is more than gas, because typically what happens historically is gas falls, diesel will fall, and then gas will go up, and then diesel will kind of follow. It's almost like this catch-up race. But diesel over the last year or two hasn't fallen, and I was like, I need to do some research on this. Why is that? And I found that, well, a couple of reasons. One, the demand for diesel has increased. So heavy equipment, construction workers, they all use diesel in their equipment and in their motor vehicles. So the demand there has increased, but more importantly, ships and vessels are more required to. So ships and vessels were using this kind of high sulfur sludge material for their fuel, and now there's legislation for environmental reasons for ships and vessels, that sort of cargo ships that travel between countries. Have to use more of like a diesel substitute. So it's not quite diesel, it's refined a little bit differently, but it's interesting. So basically all this extra demand for diesel from the shipping industry, from transportation, from the vessels is causing diesel prices to stay where they are. And especially in the US, the tax on diesel is a little bit higher than gas, just so you know. So that's kind of why you're seeing diesel prices sort of stay where they are rather than like gas, where gas is sort of fallen. So what's the key takeaways? What's the big picture, especially with the stock market? Because I'm tracking the markets every day. I know a lot of you are, asking me about this too. So one thing to recognize is this, and I said this in a previous video. First of all, over the past 10, 11 years, the stock market has gone up over 400%. Of course, we've seen about a 25, 30% decrease since the highs in January and February, which again, another thing that's interesting is I'm trying to quantify how much money was how much does that reflect as a value? So The stock market in the US is about 35 trillion, and the rest of the stock markets around the world are about another 40, 45 trillion. So in total, you have about $80 trillion of stock market. So if you take a 20, 30% cut in loss of value, it's about 10 to 20 trillion, give or take. So it's about that. I'm not saying it's accurate, but I was trying to quantify how much money has been quote unquote lost through the stock market. So it's a lot, but it is a prudent question to say, is this the bottom or is it not? I think we've got a long ways to go. I think we still have a lot of volatility to come. April and July is when the GDP numbers will come out. So what happens is all of the business closures for economic reasons, a big portion of GDP is from consumption, right? So the question is, you and I going to the restaurant, going to buy a vehicle, that's consumption. So a big part of the economy is actually you and I going to the stores and actually purchasing these goods and services. And now that that's been turned off, GDP will fall. And the question is, how far will it fall? And will that cause a recession? And I think a lot of people are sort of at the point where they're saying, yeah, we're probably going to have 2 quarters of negative GDP and a recession will happen. But the markets really haven't discounted that or reflected that. So that's another reason why I think you're going to see a lot more volatility. One other thing to realize that I think a lot of people don't recognize is I look at parallels to the Great Depression. I'm not saying that what's happening is going to be anything like the Great Depression. However, from the stock market point of view, from 1929 to I think it was 1932, the stock market fell from like 378 points to like 40 points. It's like 89% down. So is it possible that we can have a lot more fluctuation? 100%, right? 100%. And what's even more interesting is at the low during the Great Depression when the stock market really crashed. So we had, blue chip stocks going down 80, 90%. It took the stock market 23 years until we got back to those previous highs. That's 23 years before we saw the same figures as before. So I'm not suggesting that that's going to happen. I'm not suggesting that that what happened in the past could happen now. What I'm saying is that it did happen in the past, and we may see some volatility, maybe hopefully not as steep as that, but it's possible. And so when people say, oh, the stock market will always go back up, yeah, long term it will go up. But the question is, how high will it go up? And will it go up to previous highs? And then the second component is that the stock market can never fall 80, 90%. And what I say is it already has. It has in the past. During the Great Depression, you saw a huge correction. So really you can not necessarily draw parallels to what's happening here, but it's important to be informed that this is possible. And again, volatility is still there. No one knows when this whole issue is going to pass. Again, if we knew, the markets would price it in. But again, I'll keep you guys updated. Anyway, I hope you guys found this helpful. Please subscribe on YouTube. Would love to see your comments, your feedback, any support. Please follow my page on Facebook, share this content. Anyhow, if you have any questions, any feedback, please let me know. Otherwise, we'll see you guys in the next video.